Good evening. This is the Elliott wave update, the daily update for the S&P 500 and the NASDAQ 100 for Wednesday, October the 30th, 2024. The markets are, as everyone I'm sure already realizes, very confusing. Today, well, let's start that we saw yesterday the reaction to the earnings, and they were more like they were nice. And Google and AMD was disappointing. Google was good, was great. Um, but, and so the market initially went higher, but as we came in this morning, there was now the battle. There was a battle, and we saw that there was not going to be that follow through. We are allowing for a wave two within an ongoing impulse wave up, and it just did not come through. In fact, right now, and I purposely waited, so I sorry for the lateness, I waited for the market to reopen in Globex. I wanted to see how those things were going to be traded because we got Meta and Microsoft's earnings today. And initially, both not bad, not bad, not bad. But as Microsoft is now demonstrating, initially they ran it up and they got it back up 435, 437, 440, I think I may have saw as well. And now trading at 416. Meta, on the other hand, we saw over 600 this morning, now trading at 572. 572, in between in that handle. Now, that is now pulling the market down. Now, I want to just share with you, and in essence, what's kind of happening, because I follow the flows, and they really are very important right now because the options trading within all of these products, within the indexes, within the cash market, within the ETFs, within the volatility ETFs, within volatility, et cetera, the options trading that's surrounding all of what we are doing in terms of trading these indexes is quite gigantic. It's very, very large. And so we're seeing the levels, particularly in the Qs and in the spiders. I'm seeing it more. It's also now happening within the indexes, the ES and the NQ, but primarily it's beginning in the Qs and in the spiders. And what I'm talking about is how they're contracting the levels that you would expect to see more space between. Like they're shifting things around, like the volatility trigger, the call wall, the put wall. The put walls basically have stayed the same, but the call walls have shifted. And as the market tends to kind of get up there, they're trading a lot of options and they're doing their business, and it's shifting things around. And so what happening this morning, basically overnight almost, and so as we came in this morning, the volatility triggers were within range, but there were some higher gamma levels that were getting broken. And so in Globex, and so what happens when that occurs, when you can't necessarily go in and trade the options, but you're going to go and adjust your gamma, and you're going to do that by either buying or selling or doing what you need to do in the futures and also within those particular stocks. So a lot of that has now been producing some downside, and we're getting additional downside. So how do I want to explain that? Starting with the S&P, and they're going to be the same. They're still within that minute wave 4. I know I've talked about it, but it really has got put to the back burner. Putting the 4 there, looking like we're out of it, and then we're going to maybe come up in some form of a diagonal for the 5th wave. Well, that's now being put off. We don't know. And the other thing is, it's like, yep, still looking for that year-end stuff to kind of pick up and take off. But you begin to kind of look at it and go like, well, is it really going to? If they're not liking Microsoft and Meta, if they're not liking a lot of these companies when their earnings come out, well, what are we expecting then? Are we expecting they're going to come in and they're going to start buying it in advance because next year should be better? Maybe. But in any case, what I'm looking at here is that we're not done with this minute wave 4. So let's take a look real quick. I'm down in the hourly chart. There's minute 3. And so we're in. There's the A, there's the B. Now we're in that C wave down. Now here in the S&P, C would equal A at 57.73. And you can put a little window around it, 57.75, 57.70, maybe even let it go down a little bit. 1.618 is 56.95. Big task at hand right now is what's the market going to do when it starts to break 5,800? As some of you likely have surmised it's like 5,800. There's a lot sitting there. And so if we start to break that, is that then going to change this positive gamma atmosphere that the market has been operating in? As long as it stayed above 5,800, it sits within this realm of like, okay, we can continue to do a risk on trade, or we continue to work that way. And so now we're seeing things change a little bit. And if we start to break 5,800, look for some change. How long that's going to last, I don't know. We're actually coming up to the end of October. Tomorrow is it. So maybe we finish all this and we get Apple and Amazon's earnings tomorrow. So maybe this is going to help and put these lows in so that we can do this minute wave 5 to finish. The only other choice, and I'm going to bring this out to the 4 hours so you can pull it in as an alternate. I have mentioned it, and that would be that this -5 here in the S&P is done. And that's where it finished. I'm not saying that that's the case at all, but I'm saying that is out there as a possibility. It is an alternate, and it's one that I've put on the back burner. But I'm telling you, if we start to really break down here, then it's going to be put out. So I'm mentioning it. Right now, I'm thinking we might come down in that, finish this 4, and then stage a decent rally. One that's going to carry forward and just take this thing up to where it should be above. Now, this high still, so still needing to get above 59.27. And we still have our marker for the minute, and that'll change actually. Wherever this 4 comes in, it's going to pull that down. It will pull it down. If I'm going to put a 4 down here, this, oops, and it's the wrong button. This will also move with it. And let's just say it gets to there. It's not going to change it by much, but if it comes down to 618, it is going to change it. It's going to change it a lot, actually. You can see. It still puts it to a new high, but just. So whether we come to 100 or we come to 1.618, that the minute wave 5 high would still break that high. So below there, well, we got to start to think about something different. So right now, though, I am going to leave this right there because I don't have this level yet. All right. Now, moving averages. So we're just going to go into the daily because that's what I use for moving averages to look at a little bit larger picture. We see that we're still resting right on the 20, which is now going flat, which is why we didn't get very far. It seemed intraday we did, but flat. Still starting to flatten out, but they both still have a little bit of an upward bias. Over in the NASDAQ, it's exactly the same story. NASDAQ, a little bit more difficult, but let me bring it right down to that hourly chart, bring it down and open it up, which it is. There's the 3. Here's the A, B. We're coming down in a C wave. Now, that was a new high over the 3rd. I can bring that down a little bit. So that suggests that this was an irregular B inside the 4, but an irregular B, and we come back down to finish wave 4. But if we're using the fibs that are associated on that irregular basis, this pretty much almost got to 1.236. Oh, that wave B was 1.236 times the length of wave A. And normally we would think it flats 100%, and then we don't even normally look for that too often. But being that this was an ABCA, it puts the irregular into play. So almost 1.236. We look for then on that C wave that it's likely going to come in 1.618 or just above, because this was not fulfilling all the way up to 1.236. I think there was still about maybe 5-10 points. So we say 5-10 points from here, we're looking at 824, 191824 to come into, or a little bit higher. So that's the ticket in the NASDAQ. Again, we're already down to 0.618 pretty much. The market is it bouncing back up a little bit? Let me find it there. No, it's not. It's continuing to drift off. So we might see some really tugging and correcting and adjustments, but here as well, it is the flows, it's the capital flows, it's the gamma flows, it's the options flows. And quite across the market, there's not been a lot of downside protection being put in place. I'm seeing that now. And when you're looking at, here's the other thing that went on today, if any of you were really watching SMCI, holy cow. I mean, this is a stock that before the split was trading well over 1,000. And now it's like got knocked on its butt today because their accounting firm walked away, quit. We're not going to be responsible for your numbers. And they report on November the 5th. I'm sure it may go down along with the election. I don't know. So again, that affected the market. That kind of brought things down. And again, we are continuing to see that Meta, they were looking for good things. And I don't know if the earnings were really that bad. I'd not really gone and scoured them. Microsoft beat on both sides, revenue and earnings. So, I mean, revenue and, yeah, the earnings per share. So they beat on both. And I suspect, the thing is, it's like, but they're, as I also have been talking about, are people now getting to a point where they're starting to go like, well, what's overvalued? They're not bad companies. They're going to continue to make money. So, but where do we need to price them? And now you're seeing different things in the options. Where do these options need to be priced for Friday's expiration? Well, what about next month? What about the monthlies? What about going into next year? How are we going to price this? So we're going to see a lot of shifting along on all the strikes moving forward as to where they're going to consider what it is. There's Meta's earnings right there. Earnings per share, $6.03, and the stock is down. Truly, it's like, well, what were you expecting? But it's a company that wants to be $600 a share. And maybe they split. There's the other thing. All right. So here, I'm going to let this C wave come out right now. We're bumping into the 0.618 retracement. It should be some support. I'd be looking for it because we also have that low right there at 24.29. So if we start breaking there, then my thought is like here on the hourly chart, we broke the 50, we broke the 200 today. On the daily, not looking all that bad. Still have the 200 sitting well below. So I think they can manage and come out okay. It'll go flat. The 50 is going to sit right in between and it could get broken, which may just toss the cookies a little bit. So let's just be prepared. And I'm thinking tomorrow, maybe Friday is when all of this wraps itself up. But again, tomorrow we have Apple and Amazon. And let me just take a look at what do we have tomorrow in terms of economic data. We have personal income and spending and PCE, and also U.S. Initial jobless claims, U.S. employment cost index, and the Chicago PMI. Tomorrow's a kind of a big numbers day. And we know that the Fed, their best friend is the PCE index. So we had a couple movers before we even open, and I imagine overnight it's just going to also kind of do its thing. And if you follow MicroStrategy, I'm checking there also did not shine too well. Okay, I'm going to try to keep these things on the short side. So just I'm getting a little bit of suggestions. Maybe try to keep it under 15 minutes. I'm going to give it a shot. That'll be it for today. Next update will be on Thursday, October the 31st.